Okay, now we start a multi-series part about going through position trading, swing trading, and scalp trading. We are going to start by looking at position trading. So when we're trading, let's rewind back to the grinder for a second. We kind of talked about and learned that you need to be taking trades all the time, every single day, if you're doing this for a living and if you're expecting to have a career and some longevity and build your account and all those great things. You need to be taking trades every single day. So if you're taking trades every single day, you need to start breaking down what the good trades are that you should be in for longer periods of time, what the mediocre trades are that you should be in for medium periods of time, and what the short trades are, which you should be in for a short period of time. So you kind of have this array of different trades between position, swing, scalp trades, and then different types of trades, right? Whether you're using leverage, whether you're using just one-to-one, whether you're trading Bitcoin, altcoins, it doesn't matter. So first we identify in building kind of our grand scheme. That's what this is going to be. We're going to be building a grand scheme, right? So in identifying your grand scheme, you want to just start to take your technicals and draw them out. So we're just going to walk through this together on Bitcoin. And we're simply going to mark out some levels here. Use that to that right there. Right, so we, quite simply to start, we broke trend, had to move up, right? Now we are pulling back off this, possibly having another pullback on the move, right? So we can now take this, adapt it out here, pull this out to here and adapt it. So this is what we're looking at for our trend right now, right? So let's just double check that. Oops, let's just double check, make sure that's correct. Zoom in a bit here. Hard close is right here. So then we're going to cycle through the time frame. Next hard close is right there. And I don't think you're going to have anything over that. Oh, you actually do. You actually do have the 4 hours. So that's fine. This is what we're going to use for our trend. So this is kind of you're starting to build out this top side. This is kind of the guiding light that you're going to use to see your trades, right? And let's build out the bottom side too. Right, so we're going to build up the bottom side a little bit here. We're just doing some very light TA for now. Go from here to here. This is the bottom side. And you are simply going to now go from here, there, you close there, you go there, and we're going to adapt it a bit here, right? Are going to adapt it down to the 4 hour, right there. So we kind of have our trends here. So we have a very generic starting point, right? We have a very generic starting point to start our position trading. We have a very generic way to look at this chart from okay, what looks like the bigger levels, right? So when you're talking about position trading, when you're going to be in a trade for a little bit of an elongated period, you need to understand where the stronger levels are, right? For example, if we start to hold this and come down here, hit this hold level, you're most likely going to be looking to go up and break this up. And this is going to be more of a position trade, right? This is going to be more of a position trade where it could quite possibly be a swing trade. But I think this is going to be a bit more of a position trade. So 26%. If it goes there, I'm not sure if it's going to. We have to analyze this move as it's going. But we have some beginning criteria of what we can expect for a position trade. So if you're 100x leverage on this, that's 2,600%. That's a heck of a week, right? So you want to set aside a certain amount of funding for a position trade. Whether if you're, let's go with our bankroll management strategy and say that we have $10,000 in our account. We're using $500 positions. Maybe we want to take one $500 position as a long, right? Here as a position trade, because we can kind of build out this scenario that we see, oh, we're not looking to be the grinder or do scalp trading with this. We are going to take a portion of our entire bankroll set it aside for this trade, and we are going to position trade this. So we can have maybe an active position trade open. I don't think you want really more than one active position trade open on any given coin. You might want to do 2 or 3 if you really feel like you have a good grasp on what the moves are going to do. So if you want to take a position trade on an altcoin and also maybe a short on Bitcoin, 2 different position trades with larger leverage, you can do so, but be careful, because if you start getting into 3 and 4 and 5 different trades, I would rather see people focus on grinding and scalping. There's more money to be made like that than loading up a multitude of all these different position trades, right? A position trade really should only be 1 or 2 in your account. You shouldn't have a ton of open positions. It's not really day trading, and it's not really advisable, right? You're going to get into situations where 1 position trade might do fairly well, and 2 or 3 position trades that you're doing don't do great at all, and maybe you get liquidated on one, break even on one, and take half of a loss on the other. So then your good position trade, you end up making significantly less. And instead of making maybe 10x on a position trade, you make maybe 3 or 4x, and you're bleeding, and you've got kind of a leak there, and you're bleeding a lot of losses. So I don't really like to have a lot of open position trades for this reason. I like to keep it simple and clean. And when I'm trading and I'm actively trading, I like to be actively trading against the actual current market scape, which is grinding, which is your kind of everyday positions, because those exist all the time, right? You can have a long position and play the same grind position. For example, if you're in this long from down here, you can also say you come back up, you hit this trend, you come here, you hold this level. You can take kind of a grinding scalp position here and have kind of a dual position and scalp trade at the same time, right? There's no reason why you can't do that, and then close some of your position, right? There's no reason why you can't do that. So as a position trade, we are looking to maybe get into one position trade. I wouldn't advise more than that. Maybe you can get into 2, but again, be careful with that. You don't want to start bleeding out too many losses and having too many leaks. So these are kind of the things that we're looking for with position trades. So when we're setting up the criteria for position trades, we're looking at larger levels that are being hit. We're looking at larger events that are happening on the charts, and we're looking at more relevant information to say, okay, there's a bigger chance to make more than, say, 100 points or 200 points or 300 points, right? That's what positions are for. So we need to mark out our largest set of technicals so that we know when to react, right? We can do the same thing with a grinder where we built out the scenario. So let's build out this scenario a little bit more. Whoops, not that. Well, there's definitely an origin right here. I'm expecting this to be a level that gets hit and possibly pulls back off of. So I would look to see this trend break and maybe short this. I'm not saying people should short it. I'm saying I would look at how it reacts, and this would be one scenario that I would kind of build out. And then I would go and I would look at some more, and I would say, okay, what did this touch right here? This was an origin from back right here, I believe it was, or was it right here? I think it was right there. So you've kind of got 2 origins here. So you can take a short here immediately, and you can take another short here, and you can take another short on this trend, right? So you kind of have 3 scenarios now that you've built out to say, okay, we have a few different shorts we can be taking here. These are going to be position trades that I can kind of let continue on until I feel the need to close them. But these are not positions where we are kind of the grinder, right? These are positions where we have identified larger technicals, and we are going to be reacting in a much more coordinated manner, right? We've got those ones there. Let's leave that trend on. Yeah, there we go. We put it back, and let's take this off. And then alternatively, same with the bottom here. If we are going to come down here and hit this hold level and then inverse this here, we can look to short this in order to see this dump down to this level here again, which is going to be our profit take, right? So there's kind of another scenario that we can play out as a position trade. This is less of a position. This is a bit more of a swing trade. This is something kind of in between position trade and a scalp, right? More of your position trade is if you're coming down to here, you're sitting, you're riding trend, you come up, you inverse this level, you short this, or you let it climb a little bit, and then you short this. It goes straight down. That's more of another position trade, right? Like these position trades are more of areas like this where you have kind of this valley right here. It never quite reaches the valley, therefore laddering down, pushes up a second time over 2 days. You can take that the second time and then kind of just play it as a position trade and see where it goes, right? So 33%, right? Same thing we looked at on the other side. So these position trades are great because you can use big leverage on them, but you don't want to use your whole account, right? Like you want to be able to actively trade. That's the trick. That's the key. You want to have positions open that allow you to see bigger gains like this, right? You want to see these larger technicals. And this was a pretty good example of one right here where you had a valley and you had the ladder here. Even though it's pretty close, it's still technically a ladder. So this was like a great shorting opportunity. And you want to have these in your criteria too, in your toolkit, on your belt. You don't want to just say, oh, I'm just a grinder. Oh, I am just going to play the charts as I wake up every day. That's fine as a grinder. That's fine as your daily, everyday thing. But you also want to have these open too for obvious reasons, right? So when we look at managing an account, we look at having, say, $10,000. We're going to go back to that magic number again, $10,000. You're going to have 500 that you actively trade with. And then maybe you're going to extend your account and say you take $250 as a position on a long or a short as a position trade. This is going to be dictated by your experience as well. So I don't want people saying, I'm actively trading with $500. I use the entire $500 amount every single trade. And then I'm going and taking $500 and I'm going into a position trade. You're quickly going to chew through your bank account if you start making mistakes, right? So again, just like bankroll management, we need to scale our position sizing to our experience. So if you're moderately comfortable, maybe use a $200 position, right? If you were to use $200 here on 100x, what is this, like $6,000 you'd make? You'd make $6,000 off $200, and then you would have another 12 buy-ins of $500, and then you could do it again and again and again and again, right? It's methodical. It takes patience. But maybe increase that now to $500. I think that's 6,000, 30%. Yeah, that's 6,000. So $200 turning into 6,000 is no short feat, right? That's growing your account total by 60% with $200. That's incredibly good, right? Now, increase that to 2,000 one day and you made 60 grand, right? So, the numbers are there, the math is there. You guys can do that, but you have to scale the way in which you're trading your positions and in the way you're trading your active account. Again, we need to be doing this. If we have, say, 10,000 in our main account and we have 500 in our active trading account, we're using maybe $100 per trade. $100 per trade, allowing for 5 bad trades before we have to redraw from our main account like that. Or you could even use 200 or 150 per trade or 200, whatever you're comfortable with. Maybe if you use 200, you have 2.5 trades, something like that. So this becomes now 9,500, right? Now it's 9,500 because you have 500 drawn from there, right? And then you're going to have, let's say $250 on we're going to go half on a position trade, right? $250 on a position trade, right? So you kind of have your position trade that you're going to short from here or whatever. You have $500 in your active account, and this leaves us with a balance of $9,250. So this is kind of perfect, right? Because in the worst case scenario, we've lost less than 10% of our account when we've liquidated everything. This is a good call to action to go and look at your technicals to say, okay, what did I do wrong? Where was my flaw, my mistake? What did I actually miss on the charts that made me make these kind of mistakes? You shouldn't actually lose both 250 and 500. That would be a pretty rough day. However, it happens. So this is a good way to manage your position and scale in and out of different trades, allowing you to constantly build up your bankroll. So this is what we have to look at with position trades, right? We have to start looking at being a little smarter. We have to start looking at how we can take advantage of maybe using a little less in your account, right? You could even knock this down to $150, right? You could make it very minimal risk and you could bump this back up to, I think that would be $93.50, right? Yeah, $93.50. So then you have even very minimal risk, but $150 over 30% or over 20% is still thousands of dollars that you're making on the trade. So you're not really risking much of your account, right? Like you'd have to lose 20 of these mixed in with 10 of your active accounts to kind of completely liquidate your account. Meanwhile, if you were to lose 20 of these kind of smaller position trades without making one of these big trades, you'd have to lose all 20 of them because $150 on 30% using leverage, you're going to be making like close to $5,000. I think it's like $4,500 you'll make off this trade. So you would make the 19 that you lost off of catching this one, the 19 that you lost. Now it's hard to catch. Granted, it's hard to catch the top and the bottom. So you can cut it down to 20% or 15 or even 10. But you'd have to lose 19 of these and only ever make one of them work in order to liquidate a bank account. So you can quickly see how using more scaled number when you're talking about position trades, when you use a smaller number for position trades, maybe 20 or 30% of your active account drawn from your main account, it's pretty hard to lose an account. And if you lose 5 or 6 trades here and you say, okay, maybe I've lost 6 active accounts and I'm doing really bad. And I've gone down to 6,350 in my main account and I've lost 10 of these. So that's another 1,500. So that's going to be, I believe that's 4,850. My math might be off there, but I think that's 4,850. But then you get one really good position trade that made $4,500. Or let's say you even made $3,000. You're back up to 7,850 plus the 150 you have in there. So that's $8,000 plus the 500 you have in your active account. So you're actually at 8,500, right? So it's like I said, it's pretty hard to lose an account if you're scaling your expectations properly and splitting your positions between position trades, grinding. This is kind of your everyday income, right? This is like your everyday income that you use, this active trading account, and you make, $500 or $1,000 a day or $1,500 a day on a really good day, or, scale that up with the amount you're using in leverage. You could have days where you make $2,500 a day. You scale it up a little bit and you could have days where you make $10,000 a day, right? Like I see that often with my mentees, $10,000 days. So this is kind of your everyday grinding day-to-day salary, right? Your position trades are more of your account builders, and your bonus checks, your account builders, the things that, all of a sudden you get a boost to your account that gives you a big safety blanket.